Let's get a move on then and connect as well with Vishal Goyal. He's the head of Banking Research India at UBS to talk a little bit about the outlook there. Vishal, thanks so much for taking time out. Just let's get in a sense as well as to what exactly the mood is currently at the UBS India conference in terms of the tidbits that you're picking up.
Hi. So there is great interest at this time, in India. A lot of investors are evaluating their options for next year. Given the fact that banks have done decently well this year, especially some large cap names, there is a lot of questions around what is the next year looking like. Plus, I think the concerns on slowdown, which obviously emerged from the consumption slowdown, whether how the festive season was, or whether we come back, on a growth path of 6% plus. So those are the interesting questions which investors have, and therefore the interest in India still remains pretty robust.
Yeah, that seems to be the case. Vishal, often the market chatter has been, or, one wonders what to do in terms of quality versus growth, because some of these quality names seem to be peaking out, your most sought after, which have been the case for the last 7 to 10 years, without taking any names. Do you think time has come to maybe shift out of these peak 10 names within the index and look outside of that? Some of the mid and small caps, which may have gotten battered, very bad in the last market carnage or so, and have been underperformers the last 1 year, but wherein growth remains intact and there is scope for higher alpha generation.
Sure. So I think maybe I'll restrict my commentary to the financials piece, and because that's what at least I'll be able to add value. If you look at the financial space overall, and what you're saying is also right, even for financials, is that quality has outperformed over at least last 4-5 years. But the trend actually has changed from last year itself, where you saw some of the corporate banks also doing well. So not only the high quality retail banks, but even the corporate banks did well. Now the issue, I think, and the critical question which everybody is having is the weaker names, which are down maybe 50% or more, which could be the smaller mid-cap banks or non-bank finance companies. If you look at those, how to basically go about those? So there, the framework we are using is where you have a solvency issue, or where you have a significant asset quality related issue. I think those names would still struggle, at least for next 1 more year. While if there is a bank or an NBFC which is got a strong liability side, either because of the reputation, brand, or because of its own distribution, they would be able to bounce back as things normalize. So that is the filter one should be using when looking at the mid-cap financials. In terms of banks also, I think we still use the same framework that banks should have a very strong retail liability franchise. That and if a bank fulfills that criteria, then you go and seek other questions like whether the asset quality cycle is over for this bank, whether the management has changed its practices so that the next cycle they come out stronger, and lastly then the valuation, whether valuations are near historic averages or below averages or above average. So that's the way we are kind of looking at the space.
Okay, fair enough. In terms of any particular sectors or themes that you're looking at, within banks, are you looking at also some of the PSU names, for example, or at least the corporate-oriented PSU names as an SPI hold weightage in your portfolio, and how would you look at some of those?
So I think without taking names, I think we don't cover a lot of PSU banks, and the obvious reason is we don't think they have been creating value, or they would create value as a pack. But within that, I think if the bank fulfills the criteria of liabilities, asset quality cycle, then I think one can be positive. And so, to be fair, I think we've been positive on corporate banks as a pack, including private sector bank and PSU banks, where we think that the liability franchise is very strong, and therefore there is a sustainable value in business.
Okay, let's come to then some of the private sector banking names. Given the kind of quarterly earnings as well that we've seen so far, has there been anything that stood out to you, especially some of the private banking names that have been fairly consistent when it comes to their credit growth, managing to sustain their overall provisions, improvement in their overall asset quality? Is there any specific trend that you're observing?
So yeah, I think a couple of things which came about in this quarter. One, the growth which anyways we were anticipating to slow down on loan book side. I think that was a little bit appearing for some of the names, especially on the consumption side. Then on asset quality, for especially the corporate heavy banks, we've seen deterioration across the board in terms of increasing either watch list or very high slippages from not very high, but what I mean by higher than previous quarters kind of slippages. Even for state-owned banks, that was the case. The thing which surprised the street was margin projections or margin trajectory. Margins were up by almost 10 basis points for across the board, and that was clearly the positive bit which came about in the quarter. I think commentary from most of the management is still very cautious. No one is going out and kind of projecting an end of kind of NPL cycle or stress for them. So the management is still cautious on asset quality.
Sure. Okay, great to have you on the show then. Thank you so much for taking the time out, and enjoy the conference, Vishal. We'll chat again sometime soon.